Okay, welcome traders to Trade Setup in the live stream for the 20th of March. Alright, hope we all had a good weekend. Didn't get up to too much mischief over the weekend. What are we now? The market's it's opened down slightly, so we'll take a look at it in a minute. So anyone that's new to the stream, please just take a look at the screen there. We've got our general advice warning down below. Twitter on the left hand side, you can join us there. Join us on Facebook, the top right, or just link in or subscribe to us on YouTube, and that should send an alert each day when we go live. So you'll get one from YouTube and you get one from Trade Setup as well. So I hope we're having a good day so far. What we'll do, we'll just get straight into it now. I'm just going to flick it over to a different stream video here, so you can see my pretty face. There we go. So how are we doing, guys? So far, so good. We'll just kick it off firstly by just looking at the ASX. It's it's washed out a key support level just on the open today. I think this is because this is a CFD. I'll take a look at the actual ASX. See what we did on the ASX. Yeah, it's a bit intraday 30. It's still holding up there on the 30-minute chart. Just be wary when you're looking at CFDs on the levels. Just watch for washouts because it happens a lot because they've got the underlying futures with them. They'll tend to wash out levels, the 10 minutes prior to the ASX opens, or 10 to 10. I think the futures open, and then ASX kicks off at 10 to 12 past 10. So they can really, muck around with the open there a bit, and they do wash out levels quite consistently. So if you do trade the ASX intraday, whether you're looking at 1-minute chart or whatever you want to look at, 15-minute charts, just be wary on the open. They always wash out levels, which we just showed. I'll just actually show you right now. Just talking about that wash, that was in the first half an hour, so probably the first few minutes really. Close to a support level, bang, wash it out. But you can actually see the ASX. It didn't really wash out any key levels. So you still got the 57.70 or that zone, 65 to 70. That little high low here is holding up this most recent move. And there has been a couple of move down on. I just finished I think the session on Friday a bit weaker, sell off a bit into the close, and it really just sold off to where it started. Where we start about 57.90, only gained about 5 points on the day going into Friday night session in the US. We are getting a bit extended to the downside, so if this holds up and we start some buyers start stepping here, that might look good for another move up through. We're sort of targeting that. Remember that 58.27, 25 to 27 zone, or 58.25 to 30. We're targeting up there, so we'll see how that plays out. But the half an hour chart's still holding up all right. Look at the hourly, not much more data in there really. And you can see that's been grinding high. A few rejection candles there, so not looking too bad. I'm still liking that for a move up and through that 25 to 30 zone, and that should take us up to, if we can see, just back to the weekly. So if you notice, I'm shaking my head from side to side because the microphone's in the way. Such a big beast of a thing. So yeah, targeting up to sort of that 6,000 mark. It has been more grinding action. It hasn't been anything sharp like we saw there. This sort of move there, consistent move up. It has been sold off quite heavily a few times and then bought straight back up again, so it's still holding that trend up. Still looking good. I'm still looking towards that 6,000 mark, and stochastics are not a bad area. Let's just look at Mac. Anyone that looks at MACD, I tend to look at that a bit. It's in a good zone too. It's near the zero line, which could easily pop up, with increasing momentum and then rally up towards 6,000 quite easily. That's a daily, isn't it? Is it daily? Yep. So daily's still looking good. So we'll just go back to just look where the overall market is at the moment. We're going to take a look in a second. We'll just go through some of the currencies. What's kicked off now? MVF. This is one we've got. I might as well look at it now. Bought into that around 191 with this little spike up through here, holding a higher low. Popped up there. The weekly I really like the weekly. It's starting to, you know, hold some high lows. It's had a big washout through 170. It picked up and it started pulling back. So if that was weak, it should have rolled over and at least retested down towards 170. It's popped back up instead, which you can see that little sort of cup and handle type of formation we talk about. This could easily run out of steam up towards 210, but we'll see how it goes. It looks good, you know, leg down, you know, rally back up, contraction back up, sorry. Another leg down, taking out these previous lows, popping back up. So it could be a bit like this, but this price action was actually looking quite good. And the second time, so it's 1, 2 moves down. After 2 moves down, it's more likely you're going to get, you know, more buyers stepping in. You're sort of around that zone. 170 is sort of previous high in here. So it's a good little level to work off as well. We'll see how that goes. So it's starting to pick up today. If we can get up through 95 and start targeting 2 to 210 up towards there, that puts some little handy profits in our pocket, and we'll see how it goes. So yeah, what we'll do, as per usual, we'll just get through a few stock charts, go through some ASX stuff, and then just a couple of things I want to go over. One's a Luca and Galaxy GXL. Just 2 stocks, just a couple of examples on there, a couple of setups I just want to show you and just chat through, run through a bit, and then we'll jump in just to the user. So any stocks you want to take a look at, anything at all you want to take a quick look at, even whether it's the overall market, you know, look at the Dow or anything like that, some currencies, just shoot it up into the chat. If there's any charts you want to send through, just send it through to support@tradesetup.com.au, and we'll get going from there. All right, so our other alerts we've got going is Coke. That's still, it's hanging in there. We've got a 25 cent div on that, so we're actually up with the div. There's a good, this could be a little minor double top, which generally it can easily lead to a deeper correction, but you're still holding, you're so close to these higher lows, and it's not in a bad zone. It could come and retest sort of 10, 15, that sort of zone in here, and then start popping up again. We'll see how that goes. It still looks great, and the weekly actually looks really nice. That's the one we like the most. And I'm still expecting a retest of 11, or probably potentially just a push up through 11. API, that's hanging in the highs. We've got that through 196 or thereabouts. I have to check that actually. 197. So only a little bit up on that, but it's still looking quite. It's getting a tad extended. You can see on the daily, which sometimes could be a problem. Doesn't mean too much. You've got the MACDs going in our favour. We may have a bit of a correction, just back down to sort of retest that 197 zone or that area in there before we build a high low. We'll have to see how it plays out. But the weekly's in good shape. That looks really nice, holding a major high low. That's why I'm thinking it's going to go through 210. So it could accelerate. We could just build that just below 210, a little high low in here, and accelerate straight up and through. But we'll see how that goes. AJM's one we've had for a while. Through 18 is way back here. It's looking good then. It's had this big just edging lower all the way back down to here, 15.5 I think it was, and we're starting to hold that level. The weekly's just sort of come off this high here, just come off. It's starting to show signs around that 50 mark on the stochastics, showing some good little signs of holding up and build that high low, which would be nice and take us up and through 19. Just trying to think, CKF, some good bad things about that. That was looking good, and that acceleration high looks good, and we've had a few days of just really giving back those gains. Still, I think if it can hold up around that 6 mark and get some buying start to step in, it's in a good zone. Everything else is looking good, and then building that high low, and that could take us up and through. Potentially we start getting some accelerated moves, but we'll see how it goes up and through 660 to new highs. Just trying to think of what else. We've got S32. That's about where we got in, 275. It's not doing too much, not much of a news announcement there, really. Just, what are they? South 32 and OzQuest Kickstart Exploration Program. I think it's for nickel. Some bits and pieces. So in WA, not a big mover, but that thing could just... I like the price structure, and I really like this weekly too. You can see that contraction lower, back to the MAs. The MAs are still spreading, so if that kicks on up and through $3, that's going to look good, nice and healthy. First port of call is just to get through this little minor lower high in there. It's about 286. So we'll see how we go. Everything's lining up quite good. The stochastics, everything's looking good. Just have to see how it plays out. And that's it. WBC's still hanging in there. Still up quite a bit on that 32.50. We've got an entry. I think our last stop, I can never quite remember, to be honest, to be below this low, 33.50 mark, somewhere around there. So taking a partial around 34. If we get done on that, it's still a profitable trade. We'll just see how it goes. I still think that could easily edge up. I'm still looking for a bit more of a move higher, but we'll see. If we start popping up and build that lower high around 35, then okay, we'll tighten that stop right up, that exit right up. But at the moment, just give it some room. We'll see how it goes. That's it. Probably just for the stocks we've got at the moment, for the alerts we've got running. What I'll quickly do is just kick it over to the FX for some of the alerts we've got there. That's the ASX, that's the CFD there. We need that, pretty much need this to hold up above, you'd like to see above that 56.20, 57, 67 to 70 zone. Hold above this support. So even though it's washed it out, it could easily build that higher low after a major washout, and then engineer another move back up through 58.14 on its way higher. We'll see how it goes. I mean, you just got to remember the ASX is prone to that, and especially the SPY as well, prone to washing out levels continuously, wash and run. All right, we'll start off with the Aussie. That's an hourly chart of the Aussie. I mean, that looks bullish. That looks great. You know, I've had contraction low. If we can just get in on that a bit more. We've had that leg up, and we've reacted off 77.40 or 77.50, say. Reacted, contracted back in, found a support at 7,500, the whole number there, which they tend to do a lot. You know, just bounce off a whole number or react off a whole number, and we're basically making a nice strong move higher. Now, I think that was on the back of the US interest rate rise. I don't think a lot of people expected a bit of a sell-off in the US dollar. I know we've talked about this in the past, just previously. They were expecting a faster pace of interest rate rises, and the Fed came out and said, oh, we're just going to continue at a nice, even, slow pace. So the US dollar was probably factoring a bit too much and sold off the last few sessions. So it's given the Aussie a kick, which we did expect that. And that's what we saw, that big green candle. But this here, you can see a little base has formed high low at 76.65, say, just in here. And we're starting to work some higher lows. It's only on the, like I said, the hourly chart, so but it could easily push us up through this high, 77.50. You may get a bit of a washout here, so just be wary not to buy on a break. Always look to your lower time frame charts, but I like that kind of price action. That's looking good. Yeah, do expect a bit of a maybe just extension up and through there. We might back and fill a bit, but hold this high low. The key is that we hold this high low if that's the case, and that's going to take us up through 78.28 and above. We'll just see how it plays out. The Euro is looking good. We were expecting a nice deep correction. It's probably a little bit deeper than we expect, but once we got that little wash of that 106.78, we're always looking for, once it gets through, you know, it's coming from such a low level, that high low, yeah, it's corrected in here, and it's extended up and straight through 106.78. When you see them go for a low base, especially in the currency, you tend to see they're going to go break up through, you know, push a few traders into the market, you know, buy on stops, whatever it is, or any of the sellers here wash them out. It comes back in, they might start and jump back in again, and then they start getting washed back out again, all the short traders. And any longs too, they're going to have a nice wide stop if they want to stay in it. Otherwise, get stopped back out on a bit of a retracement and then look to go again. So ultimately, you want to see that correction back in after it's washed out. Really nice early sign that the thing's going to go. It's starting to kick up, and we know that there's been I think on the Euro was a few short positions built up too. So we're just starting to see this price action is really nice. Yeah, the move's down. People are selling it in here, probably selling it in here. When you get that double bottom and you build this high low, if they're not out, they should be. That's especially after a double bottom. We call them a retest fail. You know, it's pushed down, it's rolled up, made the lower high. So all your price action at that stage is looking good. You know, for the sellers, come back in, retested that low, and it's just washed out that high with this move. Sellers might still want to jump in because they think, okay, that's a little bit of washout. We're going to continue that move down and go through this zone 104.88 to 104.22. Build a higher low here and just start right at that point there, if you can see that. That's a major head up. That there is a higher low off this move back, which is a higher low off this double bottom, if that all makes sense. Well, does that make sense to you guys? Why that's such an important, when you add up all the pictures, it's really, add up all the points, I'm trying to say.
think I need a bit more coffee there. But you can see that high low is what we like to work from. So you've got a major high low and a little minor high low in here. It's really just pointing up and just looking to squeeze, put some pressure on those short sellers, which it did. Key level here, may get a few buyers stepping in that may get squeezed back out. And, you know, some of those sellers who are built up through here, I don't know where they'd have their stops, to be honest, but they're probably still getting squeezed out. They might have had a second nibble in here or a third nibble, held their position. But just here, you can see the accelerated move up. It's just really starting to flush them all out. But this structure looks really nice. You know, key level here at 107 for this trend up. You can see from the move up down from 106, say 106 even, that leg up. We potentially got the anchor just to that leg up as 107.10, which should produce this little move up here, contracted back in. Potentially we build another one here. This could accelerate through that high, 107.83, and just push up to 108.39 and above. We'll see how that goes. It looks really good. Aussie yen's another one we liked. Not playing out beautifully. Expecting that push up. We did get up to 87.50 up here, and you can see we've drawn it in there still. So that's the move we're expecting. It's just contracted off those highs, so it may be that it's just building. If you can see that, it's just holding that major. It is a key zone in here. Now, if we can get up through that high, what's that? That's 86.90 thereabouts. So we can pop up through there. I'm expecting to start taking out some of these lower highs because it tends to have that top of price action wash out, then bang, up she goes. But we'll see how that goes. I just want to draw it in before I forget. Does that make sense on that one there, guys? You can see that market's contracting, but as long as it holds, that's your key level. So it's pushed down, popped up, contracted in, made a high low off that spot there. Just after we wash out some of these levels, some of these high lows just in here, with that washout there, and built another high low, and off we went. Contracting back in, potentially doing the same thing, just washing out, retesting that zone. But if we can hold these little high lows and pop up through here, I think that's going to be game on again. And just break up and out of contraction on its way to 88.15. Any questions on that? And we'll just have a quick lastly but not least. Last but not least, isn't it? That's our 4-hourly chart. This was the pound trade. We alerted to this as a short, as a bit of a short squeeze, and we all know why. That's a nice little shoulder trade there when it's just broken through the lows. It pushed down. I expected more of a move down to 120.16, so potentially retesting that support zone, that major support. It pulled up short, especially when we got that spike through 21.40, and you can see this type of price action. That's what I think you've really got to start taking. Not start taking. That sounds a bit cocky. Just take note of that type of move. It's popped up here, retested there, but it's come crashing down. And you can see that's been rejected, that move through 21.40. When you see that type of price action, a bit of a washout, that essentially become a double bottom. And you can see, if you can see, that's popped up, green candle, red candle, holding a potential another high low. Remember, this is a 4-hour chart. As soon as you get up through that little 121.72, that little high there, you can see that's accelerated. You just want to be out, especially if you've got it short from here. Because potentially that's saying to you that it's either major corrections go on or this is the start of a new leg higher. We don't know, especially when we expected it to go down to 120.16. All right, does it all make sense there, guys? What we're just chatting about and just looking at some of these key lower highs, higher lows, and just try to build up a picture to see if they're squeezing. It's going to be a squeeze on. Any of these long positions are going to get squeezed out and the market roll over, or vice versa. Any of these shorts that look potentially like they're building up, are they going to get squeezed out and the market's going to kick on higher? All right, I'll just grab some coffee, see if anyone any questions. Let me just clean up my video. Just got to remember there's a bit of a delay before we. All right, if there's no questions there, we'll just jump into. Now, what I want to look at. By the way, AMA doesn't look too bad. Don't mind that. What we're just going to quickly look at is Iluka. We just alerted to this. I did see a couple of nice things, and this is on the subject of, say, shoulders.
Looks great on a weekly. One, and just washouts too. It's a really nice type of price action where you can see. I'll draw it up. It's just worthwhile, taking note when you just go through charts. Just have a look at the most. We've always said this too. Look at what's happening in the past to what, and generally, each stock may have a different way of trading. Just taking note of what's happened in the past, that potentially could happen again. And this, you can see just at this high here, we've washed out there and we've just come collapsing down. And that's just been a really, for anyone that's buying in here, what you don't want to see, and you can see there's been really nice price action through here as we've held higher lows and just broken up. It's sort of not really accelerating higher, and it's contracting. It's had a few days and it's popped back up again, had built some higher lows. That's nicer price action. It's led to a solid move up. Had a big sell-off, but the moves are it's still a bit volatile, and you can see that move down, move up, move down. It is contracting higher, so potentially it could be a similar type of price action, but it's just a bit too volatile for me. And then you've got this little washout at the top, and it's probably that last ditch effort, and you can see each time it's just cracked the high. It hasn't really, well, that's probably not so much. That's just really a double top. It's come back down. So that at that stage, maybe that price action is not looking too bad, but it's just the volatility is not there still, which means there's action between buyers and sellers. They're still fighting it out. It hasn't really, so for me, that move down potentially is not over. Just because you can see that volatility in there, some buyers maybe a bit too aggressive, a bit too early. They're jumping in. There's still some big candles, some big moves. Now, what was that over 2008? Let me just see. Yeah, it's 2012, so that was well after the GFC. Yeah, so that type of price action, even though that could be sucking in some buyers, I don't like that. I haven't seen any nice sort of setup where you've got. I like to see if you're going to get some volatile moves like that. I still want to see a little bit of minor contraction, and then maybe that leg up, which could lead to a move higher. So that's what I'm looking for there, rather than just bang, 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 bang. Does that make sense there, guys? You can just see that it's slightly different price action to what. I mean, this is obviously on a smaller scale, but you can see that the volatility started to increase, and those days have got a bit bigger. The range has got a bit bigger, and it's getting a bit more aggressive to the upside. This looks to me, it's still getting quite aggressive. The price action is still a bit aggressive. It looks like potentially some downside, and when you get that little, which it's done a few times, I think, a little washout. So you've got a little washout of the highs here. Potentially now that just there as well, a little washout at the high. It's led to a new move down, a lower high. Not really in there, but it's just got a habit of washing out and then moving down. So we're not really seeing at the moment. We're just starting to get a washout here, if you can see that, to the downside, and these lows are they're not getting washed out too low. So this is starting to look like it's seeing some good signs of kicking on higher. But the other thing, does that make sense? So we've got big leg down, contraction back up, and when you get that type of price action after that type of move down, which is, it's been quite solid. It's a strong moves down. Some really heavy selling in there. That's more opportunistic buying just in there. You want to see it be flushed. You can see here that price action. The moves are not too strong. The days are not too big. The higher lows are starting to come into play. So that type of price action there is completely different to that type of price action. Really choppy. Couple that with a bit of a washout. And what we've seen here, that would have been a nice little, if you potentially short this, little shoulder, break through that downtrend. I'll draw this up a bit clearer. Mouse frantically clicking. That would have been really nice. You can see you got really low risk. I just want to show that little shoulder trade there, which spiked through the support zone, popped back out, tries. Would have been an ideal short there. Didn't go too far really. It's current retest. You probably could have held that if your stop was just here. Still held it. It started to move down. You've got some good probably about 3. Even there was about 2 to 3 to 1. You've taken out there with that risk, really minimal risk on the short side. You've got a lot more if it moved, taken out somewhere in this zone. That would have been nice, but you can see that shoulder
there. It's good. It's good and it's important just to look for the shoulders. Any questions there? Just wanted to show you really that type of price action, and coupled that with a bit of a washout of the highs. That's coming with some heavy selling. It's gone straight through that support. So what we'd be looking for with this type of price action is more. I like to see that this build up off an up move. That's not. It's come solidly down. That there. So you'd expect some more down. You can see these lower highs lower lows not getting to. They're not really going through by much now. So that to me is starting to show signs of holding. And on the weekly chart, you can see that's extended to the downside, and we start potentially. We're at that stage now where we're really going to hold a more significant high low at 650, and that could take us up and through. All right, what I want to quickly take a look at is GXL. So any questions just on that chart, what I was trying to just get across there, the styles of price actions and when to, if it's coming off a major move up or down, just trying to take into account the recent price action and what's going on to what potentially could play out in the future. No, GXL. Yeah, GXY Galaxy. I'm just reading my notes. I think it was on the daily chart. Oh, yeah, no, that's right. This one here. Yeah, no, Galaxy. No, GXL, which is Green Cross. I think I've alerted to it previously. If anyone looks at this type of price action, this is the weekly. This move up, really strong. That's really nice. See how controlled that was. Pullback, rejection, rejection, rejection. It's just kicked on higher. Major lower high. And you can see when that correction was really deep. That's a good sign that maybe this move up is coming to an end. We don't know. You can still happy to hold it. It hasn't broken this major level here. But also your stops get a bit wider, so it's something just to be careful with. And what do I mean by that? I mean, if you're looking at this move up here, on a major level, if you've taken a partial, just letting this trade run, your stop would have had to be around that 7 mark. Potentially should have been, and you've got $3 of gains you can give up potentially because it's starting to widen. Whereas there's no, you can see that, but the moves are quite, it's up, little contraction, a little bit up, little contraction back. Starting to accelerate a bit higher, a bigger pullback. Here's a bigger pullback, and here's a deeper pullback as well, but still holding that trend. Nice strong move up, come all the way back down to retest that low, and then it's built that lower high, and it's just accelerated lower. So anytime we start seeing that fail, and the key level I'm guessing there to look at is, we can just draw that up. Once you get through there, the key level that for me that's going to be a lower high is just through that. I was at 825. As soon as it breaks through here, potentially just in this zone here, any longs, you probably just want to take a preemptive move because like I said before, a lot of lower highs lead to a break of the most recent higher low, and they just start going into corrective mode rather than expansion higher. We're going to correction or contraction. What I was going to point out on this trade, this chart looks great. We're potentially just coming out the other end. That's major correction, major corrective action or contraction. We've got a little washout here. Then we're starting to hold these higher lows. And again, we've got a little wash of a level. Not a significant level as much on the weekly, a 625, a little wash there. And then, we're doing it again. So we can see the price action for this is quite common that it washes then rallies. Wash some lows then rally. Price is still contracting at this stage. We've got a little washout here on the weekly, down below that 650, and it's starting to kick up. Now, what I was going to quickly go over, I know we had, I'm not sure if we traded this before. Let me just check. Yeah, we did. So 5th of the 1st, 707, 665. So we took a small loss on this one. And the reason why I want to just point it out is I don't want to do it again, to be honest. Now, it could be a bit of a fake out. And what I mean by that, the key levels really are through here. So we know that, just remembering like weekly basis, price is just, if we just go to here, price at this stage is just coming out of that contraction. And just the last few weeks, so you got 725 really is that key level. Just, you can eyeball that off the weekly. It's retested it a few times. Where's my chart now? So that's around that, yeah, 720 to 25. That's your key level. I love this little high low, especially off a little wash here. You know, it's just popped down to a lower level really, around that 630, that little wash of 640. That to me is going to lead to some higher price action. We know that the market's it's coming out of longer term correction, but I don't want to jump in here because this could easily oscillate and just range trade now, because the market doesn't have to go from corrective price action and then go into expansion. It could easily just consolidate for a while between a support and resistance, just range trade. A few days, few weeks, we don't know. So because we actually did the same type of thing, it was on this move here, I think. Breakout here, jumped in here, was sitting on profits for a while and then got stopped out. It was somewhere, that was around January. So I just don't want to get caught in that type of price action again. I'd rather see this pop up through 720. Once you get through 720, you know that that's your major lower high from a weekly. Everything's starting to play out quite nicely. You're in a good zone. And then I'd rather see, I don't want to get faked out by buying it. Potentially, you could have bought it through here, 705, for example. There's your risk there. That could easily just pop up, push back down, and then deeper correction, build a high low, but on a deeper correction, then start building for that move up through 720. And then you have to do it again for a third time lucky, would have been. So I'd rather see that type of price action pop up through maybe 740, maybe have a little corrective action back, and then start holding some high lows. If you hold some high lows from here, that would be ideally what we'd like to see. But once we've got that break of 720, I think that's a key. So I don't want to be faked into trading this before we get that breakout. And the price action looks great, but it could easily wash us out again, pull back, and then do nothing. Or if we hold it and have a really deep, which I wouldn't want to do either way, but if that's your style of trading, having a really deep or wide stop on that, you could sit in this for months. And that's the last thing really you want to do, is just sitting a trade for months. I'd rather give up a few cents for that to see it pop out, and even give up the potential that it's going to just go on without me, so be it. And then get that little correction and then jump in there. All right, does that make sense there, guys? Yeah. There's always going to be times you're going to get caught out. You're exactly right. But what the aim is to do is look for the high probability trades. So trying to minimize, and that's all we're ever trying to do. Everyone with their edge is always just trying to minimize, take high probability trades, something that works your edge. And I find that my edge is better is with this style, is trying to read that price action. What's happened in the past? We've got a wash out. Okay, that's potentially going to lead to a rally, but I don't want to get caught in that contraction there. I'd rather see it pop out. That's going to trigger a lot of other buyers as well. Maybe trigger a buy if it pops up through 720, trigger some buyers just in there. And then I'd like to see that corrective action. So probability for me is that everyone else is going to see a similar thing, but I want to get in nice and early, maybe get that correction there, jump in here, and then potentially get a new nice leg up, which is going to take us through 8 and above. I'll just see what we've got on the top side for that. Yeah, you can get through 8, and that's going to be a major, you can see that, major washout here, pop back up, took out that lower high at around 750, didn't get too far. It's pulled back, and that once you get up through 8, it's going to confirm that's a major high low, and a major high low should at least lead to a fairly significant rally. Where it goes to from there, we don't know, but that's the probabilities of the price action we're reading. And when you just drop it down, just remember we're getting a similar type of thing here. Once we get that through 725, that is confirmation that this here is a high low, which it basically is anyway. Does that make sense? So you're right, Nandor, you don't want to. You're always going to get chipped out, and it's always good to know exactly where your risk is. So when you do get chipped out, I want to be proven wrong too. That's another key thing I think people sort of forget. If I bought it here, so I was just trying to front run that 720-25 mark. If I bought it here, I'd have to have my stop in here, because I know if I'm wrong, if that gets me on my stop, I'm proven wrong. I was completely wrong. I was expecting it to go through 725. It didn't. And then if it doesn't go through there and gets me here, I expect a deeper correction. So I don't want to risk having to stop all the way down here, because remember, you can be wrong. This could be a major lower high, and this thing rolls straight through 630 and do a major retest of the lows. Okay, so it's also just being able to define what risk you've got on each trade. If you're wrong, where are you wrong? You've got to be proven wrong. Don't. And this is what I've seen just a few people, and I used to do it a lot of times myself, not going so much of price structure, but giving myself a dollar value risk. I'd rather not give myself a dollar value risk and giving myself a price structure risk. And I guess you know what I mean by that. Rather than say, okay, I'm just going to risk 3% on each trade. To get stopped out here might be a 4% move. So somewhere, if we just make this a bit bigger. So if you have a dollar value risk or a percentage risk on each trade, and I bought through 705, so I've just bought on this green candle here, that might put me at 692, for instance, which is still above this market. Come and get me. The trade that doesn't prove anything on the actual price structure, and then goes again, and then sort of left, stops you out and goes on without you. I don't want to do that. I always want to be proven wrong on a trade. So I want this market, if I'm in at 705, I want this to go through a key higher low. And the key higher low, say around 685 to 680. So potentially I've got my stop at 680, 678, say for example. So if that tags me on that, I know that it's taken out a key level to get me. And then it's probably going to, it's probably going to have a deeper correction, because that's going to be a lower high and so on. So that's just one way to, I guess, just with your trading, just to make sure you're looking at sort of levels. If you don't like the dollar value risk on that, lower your size. Just lower your size and give you more chance of trading it correctly from price action. Does that make sense there, guys? What did I do there? So yeah, on this one, like I was saying, just want to see that break up through 725. Not just me, but everyone else on the right track. It's starting to show signs it's going to go, and then I'm looking for the high low. So I don't want to be faked into this below, which the market does quite a lot. I can track back in. It brings in some shorts. It does it on the currencies. Maybe I'll find you an example of just what I'm getting at. Where am I? Here, for example. So if you can see here, if you're buying it in here, a lot of people would have been. The key level, really, and this is where I guess it's good to know your levels of what you're looking for. The key level at this stage, for me, it's got to break 125.78 to know that this market's probably going to be potentially on the move on the upside. Now, the fact that it doesn't break that level, it just builds some lower highs. It's really just squeezing in on itself, lower highs, higher lows. These higher lows have probably attracted some buyers. It's attracted some buyers. It's only really pushed up into 125.78 and still holding the downtrend, because that's your key. Going to move down, washed out to a higher low here. Potentially that's going to be a lower high just in here at 125.78. Until it breaks that, then if it breaks this level, then we know, okay, then we're probably going to look for a buy opportunity. The fact that it doesn't break it and it's building high lows, it's dragging in traders who are not really watching this price structure too much or properly. And that's just going to be fuel for the downside, and that's why we liked it there, because it's just retested that high, built the lower highs. So anyone who's bought it in here is just going to get squeezed back out again. So I guess what I'm trying to say is just as long as you're knowing what your levels are, here the key level to be proven right, to know we're on the right track is 725. So any questions just there, guys? Anything you want to add or ask? Anything at all? So I'm just going to quickly answer a question. Sorry guys, be 1 second. Sorry Mike, I just saw, I like that comment, roll me a reefer. We would all go up in smoke. Yeah, look, I don't know. I know Clement actually brought it to my attention. I'd sort of missed that stuff. He did say a few stocks, and then I know Davin was looking at a couple as well. So we were looking at them. I just didn't know, to be honest, what it was. I'm just going to remember my code. A8? AC8. AC8 was the one we were looking at. Probably a great example. You know, I'd never like to say, and this is what we've got to be careful. We've never anticipating that the market's finished with that sort of price action. The problem is it's just too hard and fast for me. On a weekly context, okay, it's probably nothing. But just looking at a daily context of what it's done, what the price range for the last few days, all these sorts of moves, and it's just gone bang, straight up from 25 to 80. So I think a lot of the charts, what was the one you said, MMJ? A lot of them have got this very, very similar price action. They've just gone pop up to 75. And we probably would all think the same thing, there's going to be profit taking. If you bought it around 30 and you've bought 10 grand's worth and you've doubled your money, you've got to be nuts not to take something off the table. You can sit and hold it and think of bigger things. That's great. But I think you'll be in the minority thinking that. So in saying that, you probably expect, and there probably was profit taken the last few days on that one. Oh, what's the other ones? ZLD, MXC, I think is one too, pharmaceuticals. Yep. MMJ, you said ZLD. So they're all got that, sudden move higher. So in that respect, on a daily basis, yeah, I'd expect this just to come back, build maybe a higher low, because the weekly charts, well, that's not going to see much there. The weekly charts are actually not too bad. They're coming from some major lows. You'd probably just want to see that maybe retest back down to 5, and I think they're all along the same lines. So whether you get that, and generally just remembering too, if you're looking at this weekly as a week, it's done a lot of 14, 15, 16, 3 years of really just holding around those lows, around 1 cent, and it's been through 2016. On the weekly, it was holding higher lows. So obviously people were following that story, following the fundamentals, waiting for something to happen. And then you've got really this year, it's just backed off, held some high lows, took out an inside level. Would have been great to buy it through just below 4, even at 4. Bang, it's just taken off, and you've doubled your money, at least there. So, yeah, in saying all that, yeah, I look at that exactly, Michael. I'm thinking that's too late for me, but I'm looking at the bigger context too, just remembering what's happening on the weekly. These things don't just go bang and then come back and do nothing. There's obviously been a news driver for it. You probably expect it's going to build a higher low. So just look for, I'm just trying to find some price action. Let's draw it. I don't like that. Yep. Just look for we've got a key level. It just broke up through 5 on this one here. Inside levels here. I don't think it's going to pull back all the way here. If there's some good news, there's positivity. Whoever's missed it there, I don't want to have a go at anyone, but if you're smart enough, you wouldn't have got in there, because anyone could see that on a daily basis. It's an extended market, so if you're up around 8, even where we are now, I'd be happy to miss the boat on this one if it's just going to go on absolute bananas. I don't want to take the risk. This is not a high probability trade at all for me. Or, there's no use pointing to the screen. If I'm going to hold it and buy it at 8, my risk is going to be right down at 3. I'm not willing to give up that much, 50 or 60% on the trade, just to try to be in the, in the move if it's potentially going to go higher. Because I think there's too much of a risk. It's a low probability trade to buy it up here. So really, we've got to get some heat out of the market. Potentially it's going to pull back. You want to see it maybe pull back from the highs like that. It might be more savage than this, and then start holding some high lows, maybe retest, and then you get this type of price action. That's going to drag in buys. If it happens right up at 7.5, I don't care, because then you've got somewhere to base your risk off. Does that make sense? But at the moment, you can't base your risk off anything but really down at 3. And I just don't think that's, it's not like I said, not a high probability thing. FOMO. I like that. I don't know if I want to ask you what it means or not. You have to write it in the chat. Yeah. But yeah, I think that's, once you see that, if it happens to be up here or we pull back and when it's around, we're building those high lows, that type of price structure around 5, don't care. All right, that's not the name of the game. We just want to see that type of price action because we know that this type of price action is going to bring out some, is going to squeeze some of the buyers out of the markets, maybe some early profit taking. If you've got this for the bigger picture, you want to hold it longer term, you think it's going to go, they're not going to get squeezed out here. But any of these traders that, intraday, some of the quick scalpers or whatever are going to fear of missing out. Yeah, I thought that's FUBU, isn't it? FUBAR. Yeah, that's what I'm thinking of. Anyway, what I was saying there, so you want to see that type of price action here. You want to see that. You can see that buyers, let someone else hold the market up. Let someone else build the high lows. But once you see them, then you want to start trading it for what it is and trade it off that price structure. So then you know where you're going to put your risk. Everything's a bit more subjective. You're not risking too much, and away you go. Does that make sense there? Rather than, I agree. I don't think it's going to go on too much anyway. Anything else? What else do you want to look at, guys? Let's chuck in some stocks. So it's a bit of an art form, I think. Talk about SAS and MUS. SAS is one that's went on quite hard, and I think we're in a process of just. I do like it. That was awesome through here. I can't remember where we got in. I think it was on this move here, so we ride it through 8.6 maybe. Got it somewhere around, actually it was around 17, so that was I took some partial gains at say 12, 11 or 12. I think it was around 11. Got out the rest at around 17. Missed out on all this move, but I think that sort of blowout type of move when they really go up, it's near vertical, that is really unsustainable. So you're going to get profit taking, good story or not. I think this is what people got to remember. Good story or not, there's going to be profit taking. People just can't help it. It's the psychology of trading. It's everything behind it. You're going to want to take some profit if you're sitting on 100% gains. Those type of things don't come around often. So, and they can easily go fast too. So just looking at that, I think we're just taking out a sort of level around that 16 mark with this move down. So potentially, I want to see if we get it here. Well, let's draw it up. Just so, again, this is planning out your trade, planning out what you want to see. And I've done it again, haven't I? What you want to see, there's a few things about this. Just to start with, it's in a good little spot here, extended to the downside. It's just starting to lift. So for me, whether that's going to be the most recent low and we're just going to get contraction in here, I don't want this to be, I just don't want this price structure after going up like that, it's pulled back. I don't want it to start building a lower high. And then a lower high, what does it lead to? Potentially a push through the most recent high low, and that could take us all the way back down to even 11 or 12, that sort of zone in there. It could easily do that. All right, so if this is going to be a lower high, right now this is in no man's land for me. I want to see it. The price action that I would like to see is potentially hold up above 15, contract. I just want to see some high lows build. I just want to see some of that. Let's just draw that up then. I want to see the market, if that's going to be a lower high, just contract in here, but failed to go lower, and that's a key. All right, and maybe we're going to get something like that. Or maybe that's a bit preemptive, isn't it? Let's just talk about what we always want to see. We might have that little thing pop up through here and then get the contraction. So we know that it's, at this stage, we know that's starting to break out of contraction lower. That's your early sign there, and then look for a higher low to work from. And the higher low is just so you know where you're putting your risk. That's ideally what I'd like to see here. We're not seeing it yet. there's no entry for me here. This could go either way. It could go all the way down, break through 15, or it could hold up with some high lows, which would be ideal. And the high low is going to lead to potentially another strong move up, and then you'll be targeting at least 26 and above. Then just go back to your weeklies, but there's no real, I don't think there's any levels to work off anyways, but it'll be in clear skies then. Generally, when things are in clear skies, this is the type of price action you see. With that kind of move down, I want to see it spend a bit of time, not just a couple of days, but I want to see maybe a few weeks of building that high low. That means you can be certain, well, it gives you more certainty, high probability that anyone that wants to sell it is out. And then it's going to start dragging in some of those early buys potentially in here before we start getting a breakout of the contraction. Bring in some more buyers, that just want that little bit extra confirmation, like myself probably, and then just work off a high low. Does that make sense on SAS? And you agree, disagree? All right, let's look at the Mus. That's what they call me, is it Jake the Mus? We're not seeing anything there, are we? Obviously, it's way down in its lows. It's been a lot higher than that Mustang. All right. All right, it's definitely in contraction there. So this one is pretty stock standard, I guess. I don't like that. If you don't know already, I hate that. I forget to get rid of the day. Just want a nicer, a bigger chart, and that's not it. All right. So this is quite obvious. You've got your low. The market's worked off. It's just broken out of that contraction there. Really, that would have been, that would have been nice. But this one actually looks like it's quite hard to trade, 600,000. So it doesn't ideal. You would have taken a bit of a chance of just breaking through that 2.5, and it's really hard to see too, guys. You've got a couple of tests down here. You've got that breakthrough, that high, potentially. Well, it probably coincides there, and you've got that off a little higher low here. Not much in it, and that takes it, it's the pointy end really of breaking out of that contraction. So you've got that initial thrust up. So that's your first leg. You've had contraction back in. You can see 1, 2. That type of contraction, it's 1, 2 moves down, takes out that low. Generally after that, if you can see a high low off here, that would have been nice because that first leg up, you're looking for the second leg, which played out, but really didn't show me an entry that I like to see. And here what we can see is just blown out the top of 10 cents. And then we start again, contraction again. 1, 2 moves down. So potentially we're at that stage now. We're looking for a third leg. But a lot of the times that's impulse, quick contraction, another nice strong impulse move. That secondary group of people that don't want to miss out on this. It's a nice strong move higher. We may have to see some better price action here. It's contracting back in. Whether we just start seeing, we'll just draw this up, pop back up. What if we can see, just some nicer high lows and then lower highs, just sort of that price action. That's what I'd ideally like to see, and just take a bit of time to do it. It just means that there's anyone who's bought it here and it's held, maybe has decided to get out, or if they're going to hold. We want to see more buyers being dragged in. So remember too, if there's only a certain amount of buyers that are happy to jump in, yeah, no worries, Clement. If there's only a certain amount of buyers jumped in, there's been one leg up, and if no one's really sold it or this might be just partial. It might be a few that have been washed out here. So a group of buyers. So now you're sort of down towards, I don't know, maybe 30% of them used up here. There might be another 30 or 40% used up there. So it doesn't really leave too many buyers left that are wanting to get in, because they might see this move. Okay, that's quite strong. It's gone a bit too high. I'm not too comfortable with buying it at this stage because you've had two strong moves up. And there's not, we haven't got an infinite amount of buyers, don't forget. So we've used up quite a bit of that buying power. So you really just want to see this type of price action just to wash out a few, maybe wash out a few that have bought it down here. They might take a partial, but just to get some of that buyers on the sidelines, which just means that they're willing to get back in again. It just means that there's more fuel to potentially move this up and through 10 cents. Does that make sense here, guys? On the first move, you know, it's a bit different story. We've only had one move up, so whoever didn't buy it here has been watching it, and they're going to get a bit shitty with themselves for not buying it. See this type of price action here, might just go, okay, jump in. I'm just going to jump in, bang, or jump in through that high there, and they're back. You know, they're in because they missed that entry down there. Then you've got a bit of a washout of the highs. It might need a bit more solid price action, and don't forget, and you can sort of see it here, that distance there is probably only about a month. It's probably more like 2 months since making that high. Even washing out, it's probably been more like a month and a half. So it's going to take a bit more time, I think, to get that price action, which means anyone that's been holding it, especially if they bought it in here, it's going to wash out these people first. Maybe the people that bought it, you know, with a move through here, even a breakout here, are going to be feeling the heat. They're going to be the first ones to get washed out. Then you might get some of the buyers in here getting washed out. So you just need some of them on the sidelines either way. Does that make sense? But either way, there's nothing happening for me just yet. Not even a move through 8. I don't see that as a solid entry setup. I'd rather see that corrective action, build that high low like this, and then start looking for an opportunity. And if that's the case, it pulls back to say 7.2, 7, you know, between 7 and 7.5, and then pops up through 8. Okay, it might be a nice little sign that that's the high low you're going to get rather than this contractive action. That's going to be your high low, and then on we go. NPL, yep, I will do, Paul. Let's just jump on to SLX. You got me curious. Now that there, let's just look at a weekly. It's actually looking pretty good. I don't even know if we've looked at this in the past, but it's just not, you know, to put out alerts. Nowadays we've been dealing with, you know, some banks and stuff. We don't want to put out obviously ones that are too small, but these smaller stocks, when they go, they can really bring in the volume, really drag it in. But the way we look at it, we're generally looking at it with sort of lower volume times, because that's when you're getting into the trade more in the unknown zone than the known. You know, for people, we don't need that much confirmation. We just like to see that, you know, what we look for, obviously the high lows and a little bit of a breakout, and then, you know, okay, jump in. And it's not generally when the herd mentality is jumping in, so that's why they tend to be a bit low. But we are looking at this one anyway. I don't know if this is going to drag in some volume. It does, it does kick on with some volume, but either way, that's your weekly, and you can see that that's starting to show some really nice signs. Okay, don't worry too much about this. Spent a lot of time doing nothing. 15, 16. Very tight range compared to what's happened in the past, and it's starting to hold some high lows, so that's looking great. No reason why not to be interested on the weekly. And the daily, let's just get, yeah, obviously the key levels around that 30 cents. It's held a high low around 40, so we're looking really, let's have one. Ooh, let's actually just draw this one up. I just want to get that. That's not going to give it to me, is it? I just wanted to get this high in the chart as well. There's a few little things on this one. Stochastics to start with, just it's getting a bit extended with this move up, which sort of coincides with that high too. It's not a major level. It's taken out a few. We can see there's a little minor. Not really. So the market's just trying to get my bearings, really. Yeah, okay, there's a few little things here. If you can see it here, that's just the chat there, guys. All right. So with SLX, you're coming off a really nice base. It's 10. It's held the high low. So we've got that initial thrust up. It's still, the thing is, it's still within that high there. Okay, so this is more of an inside trade. So taking something here, even here, they're all inside levels, but they're still holding those high lows, which is really nice. And you can see the type of price action we saw after breaking through that high, just at 51, say. You got your risk down here. You're paying off about 3 to 1. I don't know if my eyes are right, about 4 to 1. It paid off if you got the high. So there was a really nice trade in there, but it was all below that high. So even if you're targeting just that high there at 70, that was a 2 to 1 trade. So that was nice risk to reward off the higher lows. It's all within this high. So, you know, and you can see the way it accelerated. If you got in here and then the next day it took off, you just hold it, see what happens, because that's really, you know that you're on the right side, you know that everyone else is seeing the same thing as you, and then see what it goes, you know, what happens. It's only really, so that, the only thing about this one, if you take this as the low and that's the high, and the reason why I'm just trying to work it out. If that's the high there, then potentially we can be working, we want to see a lot more price action in here before we potentially take this as the base 57.5 and project that leg out, which is going to take us up quite a bit, say from 30 to 60 cents potentially, say 55 cents. If that's for somewhere around 50, it takes it to $1.10. There's going to be some nice juice in this one, I guess, if that's the case, if that's the leg up we're looking for. But I still just want to see some more price action. We're holding a low here. I'll just get rid of all this rubbish now. All right, so the first thing, we are holding low. We've got a little washout, probably 0.5 cent, which is not a bad sign. We've just taken out a little minor level. It's just here. You can see that push down. So I produced a leg down. Didn't quite get to the lows. Popped back up. Did get down to the lows. Popped back up. Just washed out the lows. And then we've just taken that leg up with that move up here. So we're just taking out that little high. But it's just reacted off a little level here. So I'd ideally want to see it pop up through 70. Probably pull back. And then again, you just want to see, that's not what I'm doing. Let's just get this right. Just so that's our 70 mark there. We're just reacting off that now. I'd rather see it pop up and then maybe build the high lows in here, bit of contraction, and then you get that acceleration. But it is starting to show some nice signs. It's only really because it's broken through that. It's about 66. That little high there, because it's broken through there, it's starting to show, and after a little washout, it's only 0.5 cent or so, it's starting to show that this is going to be a key level, a key major high low, potentially like we saw here. It didn't really, it just kept, buyers were soaking it up. Every time it went down, it's got lower highs, they were soaking up, and eventually they won, bang, you got this move up. We might be seeing the same thing play out, but I think, again, because we had one little leg up, pull back, another little leg up, it's in that third leg. We want to see, and when you're asking the market to give you a third leg up without a major contraction, it's a tall ask. Does that make sense here, guys? But yeah, it's definitely showing some really nice signs that that's going to hold that high low, and I just want to see it pop out. I would love to see it pop out through 70 and then pull back and hold, you know, that contraction, that high low just build in, just so we got somewhere to risk our gains off, and then buy it on a breakout of that. But definitely you're on the right track there. It's just, remember, it's just extending. That's probably why it's reacted off 70 as well. So if you can get that lining up, you know, we had a little correction. It holds the high low just in there. With the market getting to the sort of that oversold territory, and you're holding your high low, then that's a nice little, you know, especially if we get that top price action, that would be ideal. That would be great. All right, let's just move it over to MPL, and then we'll have to finish it up there, I guess. We discussed MPL in November last year. All right, let's draw that up. Yeah, I don't really need, I guess you don't really need to look at the weekly, but I think I will, just to get an idea of what's happening there. So on the weekly, we've had that good strong push up. We're contracting lower. So we're looking for a weekly higher low. Okay. And that was back in November. So at November, we're looking for a higher low. All right. So if we go back down to the daily, just remembering that. So that's November there. This was potentially your high low. It's not confirmed. You only really confirmed. So back in November, the reason why I was happy to stand aside, early sign that it was going to be a high low is, sorry, a major high low on the weekly basis was this little daily high low. I'm hoping I'm not getting you confused there, Paul, but until we break through that level, so maybe, let me just check out when we actually alerted this. I'll just see if I can get it up there, Paul. This is probably the end of November, so we just got that confirmation here. Why isn't that showing me any more chart? So I don't think it hit 275, did it? Oh no. So we did trade that one. Yeah, so at this stage we didn't get confirmation. I think we were just looking at it. The first, looks like the first chart we drew up was this one. We just got breakthrough that 265, which is about here. So it was early December. So it was confirmed that this is going to be a major high low. So okay, what we're looking for from there, and the only reason it probably was looking, it was probably a bit early there, was just we didn't actually break out of contraction just yet. It's coming from a nice low, so really I didn't want to buy it through that break just in there. I'd rather have got it through here, which I think, did we do it there? 275, so it was on the first pullback, wasn't it? Yeah, it was here. Okay, so if we just take it, we probably have to draw this line a bit better. So at that stage, we're looking at it. That was the resistance line there. So really, what we had working in our favor was a major higher low from the weekly, remember? This is confirmation that we've got that higher low when this downtrend is broken. And it's broken at this stage here. It's pushed up, but we're still, you know, there's a chance that we're still going to contract, and it's pushed back. We've retested that zone at 265. And then I really did like that little pop up through here. Now, the difference between here and here, and that's probably why we got this choppy price action. And I don't even know if we made anything on this one, to be honest. MPL 279. We lost only a % or so. And I think we got done on this little move. It would have been through here. Yeah, so we got chopped out, and that's because we hadn't really broke out. So this was more preemptive, that, and it's probably, you know, bad trading, whatever you want to call it. This was preempted that we're expecting that move up because we got the major high low, but there's no reason why the market can't just get a bit choppy. Sellers are jumping in, however they put in their price, you know, their resistance zones, and that's probably why we got chopped out here. The difference now is that we're starting to see it's coming out of contraction. We held a high low on a major basis on the longer term weekly. We're coming out of contraction on the weekly chart. So this is your first really strong sign that if we break up through 290, potentially that's a nice little buy. And you can hold your stop below this low here, around the 270 mark. And just see how we go, because that's going from contraction, we're going into its expansion. So that's what we're looking for. At this stage, we weren't. Does that make sense there, Paul? And you were only willing to watch it. The chart now is very similar to what you explained. What is more interesting than now that November last year? Yeah. So does that make sense to you, Paul? The difference that we haven't, well, at this stage here, even then when we traded, it was probably a dumb trade really in hindsight. Maybe the stops were even too close. We probably should have had it below that low. But the reason why I think we had it tight was because that we hadn't really broken out of contraction. I'm not willing to risk too much on it. So probably shouldn't have traded in that respect. And there might be a little trade in this, you know, break through 290. But the fact at that time it hadn't broken out of that longer term contraction, if that makes sense. No worries. So any questions there? Just before we call it a day? Let's just see where the market's at. So I'll just wait for everyone to catch up there. This market's still down 20. It's still hovering down these lows. No, all good. All right, we'll call it quits there, guys. Like I said, thank you very much for joining us, and we'll be back on Thursday at 12:30 again. So just be ready and raring with the charts. Anything that you want to take a look at, like I said, it can be anything at all. As long as I can get it on the chart, we'll take a look at it. We'll see how this market goes. I'm still sort of biased to the upside. I still think we can do all right. Even though it's getting a bit grindy, this price action on the daily looks good. It looks like it's going to at least, bust through that 58.27 if it's going to be a washout and then it rolls over. We haven't seen any evidence it's building a lower high. So really that price action there is looking quite good. We could get a bit of this type of thing, but I think that's a bit different prior to the elections. So we'll see how we go. I think it looks great. We'll just see how the next few days take us, and we'll have another chat on Thursday. All right, thanks guys. Speak to you then.